Hello, tax colleagues. Greetings to all of you. My name is Melissa from Halim Santoso and Associates. In this Tpdoc section, I would like to discuss about the OECD guidance on transfer pricing implications for COVID-19 pandemic. If you like this video, please give a like, subscribe, and share our channel. Thank you in advance for your support. So, here is an overview of the Tpdoc guidelines. Due to the COVID-19 pandemic, economic conditions and policy responses have created new challenges in transfer pricing practices, including the application of the arm's length principle. OECD published a new guide entitled Guidance on Transfer Pricing Implications of the COVID-19 Pandemic, which focuses on 4 priority issues that consist of: first one, comparability analysis; second, losses and the allocation of COVID-19 specific causes; third, government assistance programs; and the fourth, advanced pricing agreements. Now, we will start from comparability analysis. So, what is the issue? The economic changes which caused by the COVID-19 pandemic creates challenges to the comparability analysis. This pandemic may have a significant impact on transactions between independent firms and may reduce the reliance on historical data when conducting comparability analysis. This may require taxpayers and tax administrations to consider practical approaches that can be adopted to address comparability adjustments. It should be noted that such challenges may vary depending on the impact of the pandemic on the economically relevant characteristics of the accurately delineated transactions. It is also important to consider any changes in the economically relevant characteristics, including the terms and conditions of the intercompany agreement, whether it is at arm's length or not, and how unrelated parties would have tried to renegotiate those terms and conditions. Next slide. What are sources of information that can support the comparability analysis? So, OECD states that any form in publicly available information regarding the effects of COVID-19 on the business, industry, and controlled transaction may be relevant in analyzing transfer pricing policies. This may include the first one, an analysis of how sales volumes have changed during COVID-19 by comparing with analysis in pre-COVID years. Second, information relating to outstanding costs caused by either with related or unrelated parties or by the whole multinational group, including the government assistance that has been received and its accounting treatment. Third, details regarding government interventions that have affected the pricing and control transactions. Fourth, information from interim financial statements. Fifth, macroeconomic information like country GDP data or other economy indicators from central banks, government agencies, industry, or trade associations. 6. Statistical methods such as regression analysis or variance analysis in order to analyze the response of corporate profits in certain industries to GDP movements. Next, a comparison of budgeted or forecasted data and actual results relating to sales, costs, and profitability. And the last one, a comparison of analysis of the effects on profitability in previous periods and in the current year. In the next slide, there are things that need to be considered in setting arm's length prices. The first one, use of budgeted information. Another potential approach to utilize in setting transfer prices is to compare budgeted financial results to actual results in order to find out the effects of COVID-19 on revenues, costs, and margins. The financial outcomes with the impact of COVID-19 may provide useful information, particularly when assessing the financial impacts from COVID-19, whether there has been a reduction in sales volume or increment in operating expenses, and determining the contractual terms and risk assumption of the parties. This analysis may include the first one, the detailed profit and loss analysis showing changes in revenue and expenses with an explanation resulting from COVID-19. Second, details of profitability, including factors that have a positive or negative impact resulting from COVID-19 on the profits of the taxpayer and should be supported by evidence. Third, the evidence whether there is any increased allocation of costs or a reduction of sales in the control transaction by also taking into consideration its function, asset, and risk analysis. And the last one, any evidence of any government assistance affecting the control transaction and its accounting treatment. Second one, timing issues. Delayed availability of contemporaneous information of uncontrolled transactions may happen due to COVID-19, but it can be handled by using prior year financials along with available current year information to support transfer prices. Because of this pandemic, entities will probably be unable to finalize their accounts on time. They will also presumably upload to various databases for the purpose of benchmarking not in time, which causes data to be available later on. For example, the application of the transactional net margin method, which often relies on information from commercial databases, will be interrupted since data will be available at a later time. And in these circumstances, taxpayers will need to base their analysis on prior year data, utilizing current year data to the extent available. Third, utilization of data from other crises. So according to OECD, the use of data from other crises is viewed as giving rise to significant concerns in comparability due to the unique and unprecedented nature of the COVID-19 pandemic. That is why it would be better to base comparability analysis on actual economic circumstances. Fourth, period of data. The use of multiple year data and averages remain applicable. It can be used as a means to learn the impact of accounting differences, the profitability effects for a tested party based on its business, and to assess the reliability of the comparables. The use of combined periods, which include both years that are impacted by the pandemic and years that are not impacted, may improve reliability. This approach would bring out the financial results of the financial year of 2020 with more normal results of prior years in order to test the arm's length nature. Moreover, this also includes considerations relating to the effect of government interventions on business activity performance. In some cases, government intervention can allow business activities to continue or even force to stop due to the COVID-19. This aspect is also relevant in performing the comparability analysis. Let's assume when government intervention forces a taxpayer to close its distribution facilities for 3 months. In undertaking a benchmark analysis, it is preferable to verify that comparable enterprises also have faced similar conditions. Otherwise, it might be necessary to adjust the period by excluding economic data corresponding to the 3 months where a taxpayer was unable to operate. Fifth, evaluate the set of comparables. The COVID-19 pandemic has brought significant changes to economic conditions. It may be necessary to review the suitability of those existing comparables by revising the criteria. For example, assume that geographic comparability is considered as the most relevant factor given the effects of COVID-19 in a particular market. In these circumstances, in order to obtain reliable data, it is important to focus based on the criteria. Last one, loss-making comparables. Comparables that suffer losses which qualify the comparability criteria in a particular case should not be rejected just because that they suffer losses during the COVID-19 pandemic. When performing a comparability analysis for the financial year of 2020, it may be appropriate to include comparables that suffer losses, especially when the comparables are reliable. For example, the comparables have similar level of risk that have been similarly impacted by the pandemic. In the next slide, we'll be explaining how to address information deficiencies. Taxpayers may encounter difficulties in determining arm's length conditions due to the availability of information regarding data from dependent comparable transactions. Data from other time periods may not provide a reliable benchmark for the current period due to the pandemic. Therefore, OECD provides several pragmatic approaches to this issue. Tax administrations could consider these pragmatic approaches to minimize disputes, particularly when taxpayers are showing efforts to determine arm's length prices in the context of information deficiencies during the COVID-19 pandemic. So, the first approach. Tax administrations are encouraged in performing risk assessments, evaluating audits, and considering the documentation the taxpayers provide as a reasonable efforts on which they are also trying to comply with the arm's length principle. Whereas taxpayers should also provide analysis and reasonable explanations in evaluating their likely effects for the COVID-19 pandemic and in implementing appropriate changes in their transfer prices. Second approach. Tax administrations could provide flexibility to allow adjustments to the financial year of 2020 tax returns if transfer prices are set on an arm's length basis and using available information. Also, given the potential for double taxation that may arise as a result of unilateral adjustments, tax administration may consider to allow compensating adjustments before the tax return is filed in order to allow for any available information to be evaluated by taxpayers and tax administrations to clarify if the arm's length prices can be reliably established. Or tax administration may consider to ensure access to the mutual agreement procedure or to some alternative procedure where the issue could be addressed to avoid double taxation. The third approach. The application of more than one transfer pricing method may be useful to confirm the arm's length price for a controlled transaction. And the last approach, price adjustment mechanisms, is also one potential solution according to OECD in order to maintain an arm's length outcome, especially during this uncertainty period which caused by the COVID-19 pandemic. Through such a mechanism, prices for the current year would be adjusted in a later period when more accurate information to establish the arm's length transfer price becomes available. However, given the scope of potential adjustments, taxpayers and tax administrators have to pay attention to the effect of any payments that may have on comparability analysis for the financial year of 2021, and the potential value-added tax or goods and service tax and import duty implications. As for the conclusion for this session, we begin to know that when applying the transfer pricing method, publicly available information for comparable firms often delays, and in particular when using a database to support transactional net margin method analysis, the most recent data available is often up to 2 years out of date and generally uses a 3-year period for analysis. This means that data from the 5 years ago can be part of the analysis. There are some lessons that can be learned from previous recessions, in particular the global recession of 2009, as was the case then. A range of approaches from relatively simple solutions such as using econometric techniques to forecast how the comparables might be affected by COVID-19 may be appropriate. It may also be necessary to consider different benchmarking approaches for different periods within the same financial year for the months prior to, during, and potentially into recovery from COVID-19. The appropriateness of an approach will be dependent on the facts and circumstances which should be undertaken to assess if transfer pricing adjustments are required and to provide robust evidence for documentation in time. Well, tax colleagues, this is the end of the discussion of comparability analysis. Thank you for your time and see you in the next video for the next issue of losses and allocation of COVID-19 specific